Good evening, everyone. I would like to warmly welcome you all on behalf of NGEN Research. This is Prajakta Joshi. I am from the Product and Trainings team at NGEN Research. I would be taking Friday webinar sessions henceforward along with my colleague Umer. We would probably just wait in for a couple of more minutes to let people join. Till then, what I can really do is introduce today's topic. Our today's discussions will really revolve around three focus areas. Firstly, we will see how screening of mutual fund schemes is possible, both category wise and AMC wise. Next, we will try and get a detailed understanding of various filter parameters on the MF screener on our platform. Subsequently, we will move ahead and actually select some mutual fund schemes that fit into our filter criteria and take them to the compare section of our platform and try to understand how an in-depth analysis of these schemes is possible. Lastly, we will throw the forum open for a Q&A session, and then you can get your queries answered from our team. You may either do so by typing in your questions in the chat box, or you could just directly unmute yourself to speak. Before starting, a quick check. I hope my screen is visible and the audio is clearly audible. If not, you may please do so, or you may please let me know by typing in the chat box. Let us now begin. This screen right over here is our NGEN Markets platform. For our webinar purpose discussions today, what tabs we will really revolve around are funds, compare, and then the portfolio sections. Funds tab over here is nothing but a screener of all the mutual fund schemes that are currently there and can really be invested in. You could see multiple parameters like filter by categories, filter by AMC, and multiple filter parameters like minimum AUM size, minimum age, minimum Sharps ratio, then historical VAR, and so on. What I will do now is start with filter categories. When you just click on filter categories, all the schemes that are really there are really sorted in 5 major buckets, being equity, debt, hybrid, solution oriented, and others. What others will really comprise of are ETFs, debt and equity both, index funds, and fund of funds. If you are really looking to select some of the equity oriented funds, what you need to do is just select on that specific subcategory and then just click on go. All the specific category funds will get loaded. If you are really looking at a specific category of other solution oriented funds, what you need to do is just click on that. And then along with that, even those will get loaded. As we are aware that equity, debt, and for an example, retirement for a fund will have different parameters for selection. Like for example, in equity oriented schemes, we will really look into return parameters like Sharps ratio and so on. For debt, we will consider net YTM and other parameters like what is the AUM size or the total expense ratio and the net YTM accordingly. For solution oriented ones, we will really be looking at a value at risk model, because value at risk should be the minimum for these funds, these being the retirement funds. So different filter parameters are really relevant for different schemes. We will now try and understand how we can really pick and choose AMC and include or exclude a specific AMC. If you're looking to really include all of them, just need to select all, and all of them will be included. If you are really looking to exclude some of them, just untick on them, and then they will accordingly get removed. Now I will try and give an understanding of how each of these filter parameters work. So this first one over here is minimum AUM. So if you're really looking at specific schemes which have, say, a certain AUM plus as their assets under management, what you need to do is just put in a certain criteria, say 1,500 crores, or accordingly increase or decrease the size. Minimum age here will really help you pick and choose older schemes over the younger and the newer ones. So if you are really looking for established ones and who have reported their returns for the past, say, 5 years, just put in the age as 5, and then you could just click on apply. The next parameter over here is minimum returns. So this really, when you click on this drop down, what it will really do is, if you are really looking at, say, 3-year returns, which have an annualized return of, say, 15% year on year, this is what you really need to do. And then just click on apply. This will really repeat itself. Then the fund plan is really there. Just click on this drop down. And if you really want to restrict your search or your parameters to only direct or regular funds, you could do that from here. Sharps ratio will nothing but really indicate risk adjusted returns of a specific equity oriented scheme. So Sharp ratio as a parameter is specifically used to pick and choose equity oriented schemes. Historical VAR being a risk of downside risk measure, what it will really show is, with a 95% confidence interval, my returns of that specific scheme, if I put in, say, minus 25%, and then just click on apply. So that will, what it will really do is, it will show that with 95% confidence, these schemes have never returned negative returns beyond 25%. So my maximum downside risk is minus 25% returns, right? So this criteria will specifically be useful for categorizing, say, retirement-oriented funds or liquid funds, wherein the investors or the clients are not really willing to accept any downside risk, right? So let us now focus on a specific category. Let us now come and understand how retirement fund as a solution-oriented fund will really work. So let's just clear all our filtration parameters. And then this is it. So what retirement oriented funds are really looking at is, it will be more focused towards debt, because the capital protection is what is the priority. So what we could do is put in a minimum VAR as something as low as, say, just 5%. When we click on apply, 10%, click on apply. Oh, negative. Just so negative 10%, and then just click on apply. So all our filter parameters will really get applicable right here. So what is really relevant over here is, just click on risk columns, and these risk parameters will be visible. So this is the value at risk. So let us sort these specific schemes on the basis of highest to lowest value at risk. So yes, so when you click on VAR once, all the schemes get sorted from lowest to highest VAR, right? So this is what it really says, that ICICI Prudential Retirement Fund has a downside risk potential of only negative 2.30%. And Aditya Birla and SBI funds have the others listed as above. So what we could do is pick this specific scheme for our further analysis. To do that, what you really need to do is just click on add balance button over here. What it will do is take the scheme to the compare section. We will then proceed to the compare section for performing better analysis. right? Let's just add in a couple of more, say HDFC retirement hybrid debt and say Tata retirement funds, right? Let us now filter some schemes based on say equity parameters. Say we will, for this, what we will do is maybe go on insights, and our product and trainings team really comes up with these insights on a weekly basis. What this really shows is in the last 12 months, the top 10 BSE performing sectors were FMCG and industrials and bankex. So for an example sake, let us consider sector specific schemes which are focused on FMCG, right? So let's choose FMCG and maybe banking, clear all the filters and go. Yeah. So these are the schemes that have really gotten populated over here. These being equity oriented schemes, what you really need to do is click on equity columns. So those will be the relevant decision parameters for these schemes. Let us now sort them as per the Sharpe's ratio. So higher the Sharpe ratio, the better it is, because as I previously mentioned, it is nothing but risk adjusted returns that a specific equity oriented instrument will really return. So let's sort them as per the Sharpe's ratio. So now, as you can see, the risk is quite huge. So what we could do is say, put in a minimum Sharpe ratio of say 0.55, and then just uh, say put in a minimum age criteria of say 5 years, and then just click on apply. Yeah, so from all the list that was really previously appearing, the schemes have really gotten shortened to only these 4 schemes that really meet our parameter, right? So what we could do is pick maybe the top 3. Mirai Asset Creator Consumer, and maybe say Nippon India Banking and Financial Services Fund. Let us now understand how we will do this for debt. For debt, let's choose a category of say liquid funds. Clear the parameter. When you just click on clear, all of the above set filters will just get cleared, and your specific schemes as per the chosen criteria will get appeared. And these being debt oriented schemes, what we really need to do is click on debt columns. As the results are getting loaded, we will now see how on what parameters exactly can we really rate the debt oriented schemes. So for specifically debt oriented schemes, and specifically in this category, which is liquid funds, what we will rather see is say what are the AAA category ratings that these funds really hold. So let's say which of the schemes hold maximum instruments in AAA rated schemes. So this Aditya Birla's Sun Life Liquid Fund holds 83.05% in AAA rated schemes, which is a good thing, right? We could also really sort them as per net YTM yields. So net YTM is nothing but the difference between the yield to maturity and the expense ratio. So when we just click on net YTM, what will really happen is highest to lowest, these schemes will get sorted accordingly. So typically, what we can see is there are very low expense ratios of all the liquid schemes, right? So as it is more focused into AAA and cash and the other debt instruments, expense ratios are typically lower, on a lower side. All of them are below 1%. We could really choose in, say, a couple of schemes which really meet our filter parameter of net YTM, the highest, and highest AAA ratings. What I'm doing is just clicking on this add to compare button over here, and the schemes are getting added to the compare section. What we can now do is maybe choose in an ELSS scheme. ELSS scheme per se will really, how ELSS scheme is different than index oriented funds or index funds is only on the basis of the tax benefit that it really provides. So index funds will not have typically a lock-in period. When you invest in ELSS or tax saver funds, if you stay invested for a period of 3 or more years, your client will be eligible for tax benefit under ATC, right? So this is how ELSS will really be helpful. So for that matter, what we can really do is choose again equity columns and then see 3-year returns. I am choosing to look at 3-year returns over here is because if you hold these specific schemes for 3 years, you will be eligible for tax benefits. That is the only reason I'm choosing this parameter as our filter parameter for analyzing these schemes. So I've chosen a 3-year annualized return of minimum 15%, and only those schemes are now appearing over here. So let us now come to really rolling returns as a parameter. So these schemes have to really give a consistent returns, right? So rolling returns, nothing but is an indicator of how consistent returns have been. So what we could do is just click on 3-year rolling, and the highest return generators are these specific schemes. What we could do is just go on and add them in our compare section to perform further analysis. So we have added a couple of schemes. This ends our specific screening of mutual funds section. We will now move ahead and analyze each of these schemes that we have added to compare. For that, let's go to compare section. So when I just went on clicking on compare, all of these schemes went on adding, right? So we discussed a couple of categories. So we discussed ELSS. I added a couple of schemes which really met our filtration criteria. Then I went on and added some of the liquid funds, some retirement funds, and some sectoral banking and FMCG funds. So they are all visible, right? We will now understand how further analysis of these schemes can really be made from our compare section. Let's first understand how rolling analysis can be done. So in this, when you click on the rolling analysis, this rolling window of 260 days is nothing but 1 year working day period. This is how the returns of these schemes were in this specific period. You could really change this period to whatever you would like. Say, let's say, for example, let's take it from 2018 and then say maybe 18th of July, and then just click on go. This is how the returns of these specific schemes were on a rolling basis. Rolling returns help us really understand how the consistency of the returns or the NAV price movements were over that specific period. Just click on done. This analysis helps us in understanding how the schemes returned consistent returns. So if you are just looking at, say, positive returns, so this is how we can see. So liquid funds specifically, which are lower risk generally, as they hold into pretty risk, less risk category holdings. So as we can see, all of them have written positive returns. However, as we move down to, say, equity oriented ones, so these are really sector specific schemes, right? So this is a FMCG consumer fund. So this has returned positive returns 82% of the times, vis-a-vis the liquid funds which have generated 100% of the times, the positive returns. So this parameters is really useful. Let us now understand how on a calendar year basis, these schemes were really performing. So if you are really choosing at, say, 2019, just click on 2019. And these are the calendar year returns generated by these schemes. So the highest being by banking and PSU fund, banking fund, and the retirement fund followed, right? Let's see what really happened to these returns in the COVID year. So yes, the highest returns that were really returned was by ELSS scheme, that was Parak Parak Tax Saver Fund. And let's see which was the lowest. Yes, so the banking and the banking specific sector fund, Nippon, returned negative returns. So this analysis is really possible. What we could now do is a monthly SIP analysis on these specific schemes. I could choose a installment of say 5,000, put in from say to 2021, say June of 2021, and end date of say December 30. Just click on run SIP. So as we can see, these are the XIRRs that were really generated by these schemes and the subsequent final value of them. All of these XIRR returns can be downloaded in the form of an Excel sheet, as you can see an Excel button over here for further analysis. Let's now understand how these schemes have overlapping positions or they do not have any overlapping positions. So for that, let's click on this position overlap analysis. So when you click on this, what we really understand is Edelweiss Liquid Fund has 0% overlap with HDFC Retirement Savings Fund. So this debt-oriented fund has which is retirement focused as a solution. Vis-a-vis this Edelweiss Liquid Fund has no overlap. Vis-a-vis, if you really could see this, so ICICI Prudential Long-Term Equity Fund has a 51% overlap with HDFC Tax Saver Fund. If you were really to check what overlap is really, just click on 51%. And this is the overlap that is really existing between these schemes. So both of these schemes hold ICICI Bank, Bharti Airtel, Infosys to this extent, and this is the percentage of overlap. Let's now come to correlations analysis. Correlation analysis will really help us in understanding how coordinated the movements of two specific schemes will be moving ahead, or even on the historical data that has really been recorded. A highlight of our platform is we really calculate correlations on daily price NAV movement basis and not on a specific monthly or quarterly basis. So as the NAVs move on a daily basis, the correlations get updated, right? So as we can see, there's a high correlation between Mirai Asset Greater Consumer Fund and ICICI Prudential Long-Term Equity Fund. Whereas there is practically zero correlation between Mirai Asset Greater Consumer Fund, which is equity-oriented fund, sector-specific to FMCG, vis-a-vis IDBI Liquid Fund, which is a debt-oriented fund, which makes sense. There shouldn't be any overlap ideally, because that is how you would really include these two schemes in your portfolio if you were really looking to get an exposure to debt as well as equity. So if a debt scheme performs really badly, your portfolio could be really returning positive on the basis of these equity oriented schemes performance. So that is how you could really use this correlations analysis. Let's now come to performance charts. What this will really do is, instead of some tabulated and hard-coded data, what it will really do is present a graphical presentation of how these specific schemes would have performed in this period. You could also change this period to say any customized period. Let's say, for example, 2020. And then choose and then click on go. And within a couple of seconds, the performance of these schemes will get really plotted. Now come to point-to-point analysis. As we previously saw in monthly SIP, the relevant parameter was XIRR when we are doing an SIP analysis. However, when we are doing a lump sum analysis, what will really help us in understanding the performance of the schemes better is CAGR, right? So CAGR returns are basically returned from this point-to-point analysis. So just pick in some specific period of say 2021 January to 30th of December 2022. Just click on sort and you will really get what was the specific CAGR of these schemes, these chosen schemes. Let us now come and understand how last 12 months performances was of these schemes. So month on month performance is what is really available from this tab in a graphical way. So as we can see over here, liquid funds specifically have really performed positive in all the last 4 months. These being less risky, they also return less returns. However, what they really do is they never return negative returns, as we can see from this backtest, right, from the last 12 months. However, if we were to really see at equity-oriented funds like, say, this Mirai Asset Greater Consumer Fund, which is a FMCG-focused fund, it has had some ups and downs. So January was bad, February was bad, and then again in July, the fund returned positive returns. So this data is really available. What you could also do is download all of this data in the form of PPT by just clicking on the Create PPT button over here, and the entire, all the key parameters of this data will get downloaded in a PPT report. It will be highly customized. You could add and delete slides. You could also change colors and then present it uh, for your clients for making presentations or pitches to get prospective clients or even for existing clients' performance. Now, what we can also do on this specific compare section is, now we have really chosen some specific schemes from our filters, right? So we could also convert this to a portfolio of these specific schemes by just clicking on convert to portfolio. When we click on convert to portfolio, all of these schemes will get saved in the form of a portfolio. So currently the name of the portfolio has gotten saved as compare 7. I will just go on the portfolio section and show you how you could really change this name. So this name was compare 7. Yeah. The analysis can really be performed from here. However, you could change this name by just going down and just clicking on this button over here. I will just show it to you. Yes. So this is what our portfolio is, 6th Jan 4:30 p.m. Just click on edit, just click on rename, sorry. Just name this portfolio as, say, balanced or balanced underscore custom. And just click on enter. And the name of your portfolio will get updated. You could now perform further analysis on this portfolio from here. You just have to load in that portfolio and then just click on run analytics. This is how you could really perform analysis of the portfolio from here. So this is how it will really show these specific schemes in this portfolio. We have 50% equity exposure, 40% debt, this cash exposure, and then foreign equity. So this is how what our portfolio comprises of will really be available over here. Then all of this can be really downloaded in the form of a PDF report or even PowerPoint reports. You could also download this in the form of an Excel sheet for your record and really making further analysis. I will just show you how an Excel download really looks like. So this is taken from the funds section. So these all categories will get downloaded. I hope my Excel screen is visible. So this is how the Excel sheet will really get downloaded. This brings us towards an end of today's topic-specific webinar. What I will like to highlight is we have the new development that our development team was working on is now released. So that development will really allow you to add in manual clients on the basis of statement analyzers as well. I will just show it to you. So here, when you click on clients, go to manual data. And then initially what you were required to do is add client manually and then key in all the details. Instead of that, what you could do is just click on add client from statement analyzer. And when you do that, all the NSDL, CDSL, CAMS files can be uploaded over here, and the data can accordingly be loaded. So this is all about our latest release. You could now ask any of your questions by typing in the chat box or directly unmuting yourself.
Good evening, ma'am.
Good evening, sir.
Hello.
Yes, sir, you're audible.
Good evening, ma'am.
Good evening, sir.
My suggestion, you can take it as suggestion. Hello. Hello.
Yes, go ahead, please. We can hear you.
That section में मैं ये चाहता हूँ कि जो रिटर्न जो 1 डे 7 डे के जो रिटर्न्स हैं,
हाँ जी बोलिए।
वो एनालाइज रिटर्न में शो करें तो वो ज्यादा इजी रहेगा, खासकर लिक्विड फंड और डेट फंड के जो ओवरनाइट फंड के रिटर्न्स शो करते हैं पॉइंट्स।
हाँ देखिए, वैसे जनरली हम क्या करते हैं, 1 ईयर से अगर कम है तो एनुअलाइज्ड दिखाना यूजुअली अप्रोप्रिएट नहीं होता है, स्पेशली इवन सेबी गाइडलाइंस के अकॉर्डिंग। तो अगर हम वहाँ पे स्पेसिफिकली आपको एनुअलाइज करके देखना है तो पॉइंट टू पॉइंट सेक्शन में दिखता है, लेकिन जहाँ पे हम 1 डे 7 डे 1 मंथ रिटर्न्स दिखा रहे हैं वहाँ पे यूजुअली हम एनुअलाइज करके नहीं दिखाते। तो या प्रोजेक्टर इज जस्ट लोड अ फ्यू फंड्स इन हियर क्विकली। तो ये यहाँ पे जो आपको 1 डे 5 डे जो दिख रहा है,
ये फंड पैरामीटर से डाउनलोड करता हूँ मैं बजाज फाइनेंस से।
हाँ जी,
तो वहाँ तो दिखाते हैं लिक्विड में और अल्ट्रा शॉर्ट प्रोडक्ट्स में सारा 1 डे वीकली ये सारा मंथली तो एवरेज रिटर्न नहीं दिखाते हैं।
देखिए मतलब आप अगर 5 डे रिटर्न को एनुअलाइज करेंगे, आप क्या कंपैरिजन के लिए करना चाहते हैं कि 5 डे का एनुअलाइजेशन वर्सेस 1 मंथ का एनुअलाइजेशन?
एक्चुअली मैं डेट का थोड़ा सा मेरा पर्सनली मतलब कुछ बैंक्स को मैं करता हूँ यहाँ पे।
हाँ जी,
तो वो करेक्ट इंफॉर्मेशन नहीं मिल पाती अगर मैं पॉइंट में करूँ, फिर मैं अपने कैलकुलेशन निकालूं मल्टीप्लिकेशन में, तो एट द नटशेल सारी चीजें मुझे दिखाई नहीं देती, तो फिर मुझे वो स्विच करना पड़ता है बजाज फाइनेंस के फंड में।
अच्छा,
क्योंकि लिक्विड और ओवरनाइट में जब तक हमको 1 दिन में 2 दिन में 7 दिन में 15 दिन में अगर एवरेज रिटर्न नहीं पता चलेगा, इट इज डिफिकल्ट कि 0.01 और 0.02 पे तो कैलकुलेशन बहुत मुश्किल है।
अच्छा, तो आप ये जो कॉलम्स आ रहे हैं यहाँ पे 1 डे 5 डे, इनको आप एनालाइज करना चाहते हैं?
जी जी जी,
हाँ ठीक है। देखिए हमें थोड़ा सा टाइम दीजिए, यहाँ पे हम मतलब एक ऑप्शन
बोल रहा हूँ।
हाँ जी, हाँ जी, यहाँ पे एक मतलब हम यहाँ पे एक ऑप्शन दे सकते हैं ऊपर, जिसमें क्योंकि आप देखिए 1 ईयर के बाद वो एनुअलाइज ना सकते, 1 ईयर के पहले एनुअलाइज नहीं।
तो अगर कोई रिटर्न 1 डे का 0.1 है तो एनालाइज क्यों नहीं होगा? मल्टीप्लाई बाय 65 डिवाइडेड बाय नंबर ऑफ डेज, व्हाई आता है सारे।
देखिए जनरली परफॉर्मेंस स्टैंडर्ड्स में सेबी ने भी ये बोला हुआ था कि 1 ईयर के नीचे एनुअलाइज नहीं करना चाहिए, इसीलिए हमने किया था। बट एज आई सेड, हम देखते हैं यहाँ पे हम ऊपर एक ऑप्शन दे सकते हैं, एक चेक बॉक्स, जिसको आप क्लिक करें, क्योंकि हमें दिखाना तो बहुत ईजी है, इसमें कुछ है नहीं, आपने ठीक ही बोला, बस मल्टीप्लाई करना है। तो यहाँ पे हम देखते हैं अगर हम ऊपर के साइड पे कोई ऑप्शन दे सकते हैं कि बिलो 1 ईयर भी एनुअलाइज हो जाए।
मेरा तो सजेशन है, बाकी तो आपका प्रोडक्ट है, आपको क्या करना है तो आप ही करें।
हाँ जी, हाँ जी,
इनको कुछ करना पड़ता है बजाज फाइनेंस के अगर आप दो की सेविंग गाइडलाइन, तो वो तो सब पे इक्वली अप्लाई होती है। तो हमको बजाज फाइनेंस में तो हमको देखना को कितना पड़ता है, उनका 1 डे का रिटर्न एनालाइज, 7 डेज का रिटर्न एनालाइज, इवन 3 डेज का रिटर्न भी एनालाइज होता है। तो वो करेक्ट पिक्चर प्रोड्यूस करती है लिक्विड और डेट फंड पे।
समझ गया। तो ठीक है प्राजक्ता, प्लीज जस्ट राइट डाउन वन रिक्वायरमेंट दैट वी शुड ट्राई एंड गिव अ चेक बॉक्स ऑन द टॉप, एंड सर होगा क्या कि अगर आप उस चेक बॉक्स को क्लिक करें तो बिलो 1 ईयर वाले भी सारे एनालाइज हो जाएंगे ऑटोमेटिकली।
यस यस यस,
ठीक है सर, थोड़ा टाइम दीजिए, हम नेक्स्ट किसी एक रिलीज में इसको डेफिनेटली करेंगे।
थैंक यू फॉर टेकिंग द क्वेश्चन, उसको आप इम्प्लीमेंट करेंगे वेरी मच
डेफिनेटली सर,
थैंक यू फॉर
थैंक यू प्राजक्ता, प्लीज राइट इट डाउन।
कर सकते हैं कि हम नेक्स्ट 7 डेज में 50 डेज में?
यस सर।
हाँ जी, देखिए सर, मैं हमारा जो नेक्स्ट मेजर रिलीज है वो एंड ऑफ दिस मंथ है, तो ये इसमें ज्यादा टाइम तो लगेगा नहीं, तो आई एम रीजनेबली श्योर कि आप एक्सपेक्ट कर सकते हैं एंड ऑफ दिस मंथ की जो रिलीज में बाकी चेंजेस के साथ ये वाला भी हम चेंज रिलीज कर देंगे.
थैंक यू वेरी मच. थैंक यू. राइट ऑफ.
We have a question on the chat saying, can we get, instead of percentage annual, can you get values in a portfolio? So yes, sir. So basically, when it comes to portfolios, there are two places. One is the portfolio section. Prajakta, let's go there for a second. Okay. So here, when you upload any portfolio, you always have to specify them as percentage values. However, there is another section. So you can see this is all percent. Now cancel this and Prajakta, let's go to the client section and the manual data tab. So if you want to actually upload a portfolio with actual values, you can actually update them here. So you can add the client manually, which is one way, and the other one is you can upload a CDSL or NACL or SCAMSCAVI file. So here, Prajakta, actually, let's just go through a very quick example of a manual edition. So just add a client manually on the top. Yeah, let's use that. Just put any name, anything, and just click on add client. Yeah. So after you do this, you can then add whichever mutual fund or stock, and this you can actually specify either the units or the current value, whichever one you prefer. So if you put some values in the so just put some numbers in here in the units column and then tab out of it. Yeah, and you can see that will be updated. So if you put a rupee value, the units will be updated based on the price today, last price, which you can see here. And like this, you can basically add any portfolio. The entire point of doing this is let's click done on this. So you got 3 items in here. And there it is. And you can just click on run analytics right at the top here. And so same thing will lead you back to the portfolio analytics, but you can update them like this in the portfolio. And finally, also importantly is when you add a client like this in the manual data section, when you click the PowerPoint button here, it will actually take your AUM, which is 23.4 lakhs here, and use that to create it. If you take this option, you can take the percentage option also, obviously. But the PowerPoint will then show all your holdings based on that. So hopefully that answers your question. So as you can see on the left here, the capital is there and all the holdings are shown in the values that you entered as of the latest one. If there are any other questions, please just let us know in the chat or just please unmute and speak. Okay, if there are no other questions, we have one suggestion for today. So we will take that into account in the next release. And thank you for your time. Prajakta, we can close off for today.
Yes, sir. So we have noted down your feedback. I would like to thank each one of you for joining on this Friday evening. We will meet again live next week at the same time with a new and exciting topic. So please do stay tuned. You could also view all our past webinar sessions on our YouTube channel, NGEN Markets. I would like to again thank you all for joining in. Have a great weekend ahead. Thanks a lot for your time.